teke ndo tuingie, mimi nataka tuingie Kengen. Yes.
Yeah. So this week's stock of the week is Kengen. Last week's stock of the week was DTB, Diamond Trust Bank. If you haven't looked at that, go check that out. So Kengen is actually mandated to generate electricity in Kenya. The government owns around 70%, and then 30% has been listed. Kengen actually separated from Kenya Power in the year 1997. They listed in the Nairobi Securities Exchange in the year 2006. As at yesterday, Friday, they closed, the share closed at around 4.5%. Within that
4.5
yeah
not
yeah 4.5 oh sorry 4.5 shillings, right?
Yeah.
Perfect. So Kengen, since it listed, an interesting thing is that when it listed, the first price was at around 11.9 shillings, but interestingly the next day it shot to 49 Kenya shillings.
Say that again. Wow.
When it first listed on the first day, it was 11.9 Kenya shillings. Next day, shot 49 Kenya shillings. And then the curve has been coming down. So the CEO of Kengen, her name is Rebecca Miano, has been in the company for a very long time.
Very respectable woman.
Yeah, she is actually acknowledged globally. I think she joined some advisory program by World Bank, widely recognized by the UN. In 2019, we saw that she was actually in the list of top 100 women CEOs in Africa. Amazing. So Kengen, guys, last year when we had COVID, we still have COVID, but when COVID was at the peak, Kengen's shares, actually, the least that it went to was in March of 2020, was at around 4 shillings. Now, the lowest Kengen shares we've seen is actually this year. I think it was around June. Yeah, it was June this year when it went to around 3.9 Kenya shillings. But then the highest, the 12-month highest so far is actually September of this year, 2021, last month, that is. It was at around 5.1 Kenya shillings. So people made some few coins on that front.
Yeah.
Guys, so what do you think about Kengen?
I think for me, just to start, for some reason, I've always associated Kengen, like whenever I think of Kengen, like I've always thought
Kenya Power.
Geothermal. Like, I don't know whether it's I don't know how. It's always Kengen, geothermal. So I've actually never thought, in a way, I don't know. I thought Kengen is GDC.
Okay.
In terms of the energy production. Like, so when it hit me, not when it hit me, when I was reading, and then it was like, they do like, hydro is actually under Kengen. Wind is under Kengen. Geothermal is under Kengen. For me, I always assumed Kengen.
I think there's a reason.
Just the one who,
the reason for that, I think, is the fact that they're looking at sustainability and all that. Then they noticed that most of the energy that they produce is hydro. And that is not so sustainable because hydro is highly dependent on rainfall, and which is, the whole climate change thing. Rain was not so predictable.
It's not consistent.
So they had, again, very progressive thinking. They were like, we need to look for a more consistent or reliable source of energy,
absolutely,
which is also clean. So they went for geothermal. That's why they've been really looking to explore the geothermal energy. So I think that's why.
Just to
recently, whenever you hear about Kengen, geothermal is in the same thing.
Just to paint the picture in terms of numbers, you find that Kengen produces 75% of the electricity that's consumed in Kenya. So the others are, their PPPs and other players. You find that out of the electricity that Kengen produces, 86% is actually green renewable energy. Okay, so the other percentage actually comes from thermal. sources, which is not green. In this case, I don't know which color we can put that on. Red probably. Now, if you look at the breakdown, you find that out of the composition of energy that Kengen produces, you find that around 46% comes from hydro. That's the highest.
Yeah.
Then 39% is now from geothermal. You know, he mentioned about GDC. And
Geothermal Development Company.
It's under the Ministry of Energy. And you find that GDC, what they do, their work is simply going in to these places that might have geothermal, Menengai or Karia. So what they do is that once they get into that place, they drill and then they now sell the geothermal steam. So they sell it to Kengen and they sell it to also other private players. So the work of GDC ends at just generating the steam, the geothermal steam. So they give to Kengen, they give it to you, you do whatever you want with it. So Kengen picks that geothermal steam, they use it to run turbines and now generate the electricity. Yeah, so Kengen is a client of the GDC.
Okay.
Yeah.
Interesting.
It's actually they're their clients. I mean, I've been looking at Kengen, and if you look at their graphs from the year 2011 up to today, the graph of Kenya Power and the graph of Kengen, this is in terms of share price, they've been largely correlated, okay? So when it moves up, you see both of them moving up, both of them moving down, you know, and I've found that there's a reason for that. Because if you look at it, Kengen can only grow as fast as Kenya Power. Because Kengen sells their power to Kenya Power. Okay, Kenya Power is
the sole
they buy it. Is a sole. It's actually when it comes to electricity, is a sole customer.
Not so. Okay, now we've seen expansions
when it
into
comes
Djibouti, Ethiopia.
But then
no, but those are there as contractors.
Yeah, they are contracted and it's consultancy work. And if you look at the numbers, you find that okay, you've mentioned Ethiopia, right?
Yeah.
Djibouti, I think, where they're doing consultancy work and also some contractual work. We saw that in 2019, must have been around October there, towards the close of the year. They won the tender, 5.8 billion Kenya shillings to go and drill the geothermal wells that you've just mentioned in Ethiopia. I think that project is still ongoing, must have slowed down in COVID. But now, generally, if you look at the numbers in terms of the revenue that comes into Kengen, you find that 75% comes from electricity. The rest comes from now that consultancy and contractual work. Now, if you look at their curve, as I've just said, their growth is determined to some extent, largely, with Kenya Power. That's why you find that in April this year, when we had IMF, talking about restructuring in Kenya and a lot of issues, there were jitters in the market, with Kengen, because they thought, they knew that there'll be some of these IMF restructurings proposals might affect Kenya Power and subsequently affect Kengen. Okay, so there's been that correlation between that. It's very important that Kengen should diversify their income a lot, as they are currently doing with the contractual and consultancy work they are doing, because then it would mean that they would move away from the relationship where they have to, where their growth is somewhat limited, is dependent on Kenya Power.
Yeah, so actually,
because Kenya Power is not going to heal anytime soon.
Yeah, so actually, if you look at their objectives, Kengen is targeting to get to a point where 50% of their revenue is not from electricity sales. So right now it's at 77% as at 2020. So the goal is to bring that down to 50%. So like when you're saying, they are trying to be very aggressive in diversifying. So actually an interesting thing that also when I was looking through their financial analysis and part of their diversification, I saw that they are providing consultancy to Akira Geothermal. So Akira Geothermal is an energy company that is owned by Centum, who've been trying to also like do their own wells. They are yet to get like commercial numbers, but I saw that their contract, they are providing consultancy services to Akira, and I think they're charging like 405 million consultancy services. Like, I think that's good money for consulting, because I don't think it includes any mobilization of their items,
and they deserve because if you look at Kenya, when it comes to geothermal, Kengen is the 7th globally and the leading in Africa. So I mean, they have the experience in this thing, so they deserve that amount.
So it's interesting now that they are going more into this diversification and also like seeking for drilling contracts, not just in Kenya. They've gone into Ethiopia,
to go to Rwanda
and Djibouti as well. And I saw that the Ethiopia one is also bringing in another 400 million in revenue. So what hasn't come out clearly is what's the cost with that, what will be their profit from.
But in consultancy, there's not much cost.
No, I'm just saying, that's for the consultants one. I'm saying the one for Ethiopia.
The tender is actually 5.8 billion Kenyan shillings. That's the tender for drilling the 12 geothermal wells in Ethiopia. Now, you're asking about the margin.
Yeah, like, so is that 400? Because I saw a 400 million in that report. Anyway, 5.8 billion in revenues are good.
That's the size of the tender.
Yeah, that's good.
That's good.
Yeah,
I mean,
I don't know spread over how many years. But still,
that's another factor.
Because I don't know whether it's over 5. Anyway, that's something to look at. But yeah, I think that's a good move, like to try to diversify, as you were saying. Yeah.
As for investors, if you're one of the people who invested in Kengen, people invest for different reasons. Others are short-term investors, others are long-term. I think long-term investors they've bore the brand. Okay, it hasn't been an easy thing. It's been painful. If you're a long-term investor, imagine if you're one of the people who entered in the second day when it was trading back in 2006, when it was trading at 49. And on Friday it closed at 4.5. Yeah. So I mean, you've taken a proper beating all through. I mean, if for long-term investors, but then for short-term investors, people have really made money. There's been money to be made, because ups and downs have been there. Yeah, so I mean, long-term investors, it has really been terrible. But then Kengen has been very good when it comes to dividends. They've been giving dividends. Yeah, they've been giving dividends actually throughout, except for the year 2016, 17, and I think 18. This is because you find that they had issued what is it called? They had issued rights issue. Yeah, they issued a right issue in 2016, which closed at around 2017, June 2017.
Is the rights issue why they have such a low return on equity?
Return on equity.
Yeah.
But, okay, I'm not sure, but on the return on equity, you find that for the financial year ending June 2020 is when it was at 9%, but before that it was at around 4%, I think 5% in 2017, but all along it's been playing at around 4%, and now that has made investors shy away because that's really low compared to other people in the market.
Yeah, because I'm trying to get the 10-year history just to see the trends in the return on equity, but they do have the return on equity of 4.5% is quite low.
Yeah, it's low.
Yeah, and then when now you look at their financials, their profitability has been it's been increasing. But that's primarily because they have also been increasing their capacity.
Streams?
Yeah, their capacity generally. The amount of energy that they produce and sell has been increasing over the years. But if we were to look at the last 2 years, like this year, not this year, in 2020, the electricity revenues shot up.
Yeah.
Yet their what is it called? Their
total revenue?
Not total revenue. The unit sold in terms of gigawatt hours actually dropped slightly. So I was trying to see what made
they must have increased the price that they charge. Their profit has been growing. I think the profit before tax for the financial year ending June 2020 was at around 13 billion.
13 billion.
Kenya shillings.
Well, I was following you guys as you were talking about that, and I'm really. This is a good company, yeah. Generally, if you look, we've been talking about the management of companies and how competence is a very key factor to consider. I don't think that's something they need to work on. They have it already, but now other factors that now we may because they're being haunted by their past. That at one point you guys were trading at this much.
Yeah.
Can we get back there?
Yeah, and the curve has been going down. Generally.
Yeah. So I don't know. We might have to investigate or just seek to find out what led to that drop, because that was even pre-COVID times.
Yeah, sure.
What might have caused that?
Of course.
Like from 49 to 11, then down. No, 11 to 49. That shoot also. Did they get listed? Did they issue an IPO at when they were hugely discounted? Then got to 49 when the market, again, the market has a way of correcting its own any mistakes. Yeah. So the market corrected it upwards, the share price upwards to 49. Then what is this thing that happened that caused it to move down from 49 to as low as?
I think probably investors might have overestimated the value. Probably the people are probably confused, and so much psyched about Kengen that probably demand started going down
because of the monopoly status.
Yeah, because I'm trying to balance two things here in terms of the long-term outlook. The fact that Kengen now produces around 75% of the electricity in Kenya. Okay, Kenya's population is going to increase. Okay, there'll be more need for power. So that means the demand for electricity from Kengen will always be increasing. So Kengen will always have their demand will always be rising. So as an investor, that's a good thing. Okay, and the company is profitable. But then there is that thing where Kenya Power is tied to Kengen, okay? Because Kengen is because Kenya Power is their largest client, okay? So when your largest client is having issues, you ought to be worried.
Yeah. Okay. When you said the point that Kengen population is going to be increasing, and then of course demand is going to be increasing as well.
Yeah.
Right now, I think Kengen, and with the works done by Ketraco in terms of connecting and the rural electrification program, I think the connectivity rate in Kenya has greatly improved over the past, let's say, 5 years.
Especially with the rural electrification.
Yes, with the rural electrification program. Of course, there's still more to be done, but when you say, okay, because the population is going to grow, yes, I do get that. But then our population grows by what percent per year?
Annually.
Is it
less than?
I'm not sure about the numbers.
Yeah, it should be like
less than 10.
Yeah,
less than 10.
Because if you're to look at the two consensus,
you're sure it's less than 10?
I'm not sure.
Then don't say less than 10.
I'm probably guessing around 2% per year, because if you're to look at the
it can't be more than
because if you're to look at the population of 2019, how many are we?
We at 50
by KNBS.
We were in 47.
We were in 47 by KNBS 2019.
And 209?
209 we were at 38.
38, so that's a 10 million increase over 10 years.
Give or take, yeah.
Anyway, I don't want to get to the mental math. Anyway, yeah, it's going to, when you say population, but it's not growing that much.
Yeah.
I feel like Kengen is getting towards the peak of energy. Like their growth is not going to be like significantly big year on year.
Yeah.
So if you were to look at your revenue growth year on year, unless now there's a significant change in the tariffs, the tariff change is going to be the most potential source of growth. Yeah.
I agree with Kalia, because population is might not contribute much, because it doesn't mean that when population increases, then demand will increase, because people might shift to other alternative sources of electricity.
Makes sense.
Yeah. And also now when you look at the reliance with Kenya Power, with the price of electricity being like very much on the limelight, and will always be on the limelight, chances of these tariffs increasing are probably, especially in the short to medium term, chances of them increasing is not that high. Because right now we've had the presidential task force, there's a review on the IPPs and all that. So definitely this will affect the tariffs charged by Kengen, and so that front is limited. Like how the upside, especially in the short to medium term, the upside on the tariff charges is kind of limited in that sense. So for this, it looks like the most important thing is the diversification plan, and how easy it is to diversify. And then again, talking about that, how easy it is for them to diversify. I think there's potential. Probably now that we see them going into Ethiopia, Djibouti. So that is, I think, a big, as you said, the Kengen is a big producer even globally. So they do have the expertise, and they would, although also the competition also is out there also for them when they're going to bid for this project. But that is that is my concern primarily with Kengen. I don't think their upside, like their increase in profitability or especially revenues going forward, is that big. But one thing that is an advantage of having Kengen for me is I would consider Kengen a defensive stock.
Expound on that.
So a defensive stock, for me, ideally is a stock that would protect you from a lot of downside. So one thing that Kengen has going for it is that people will always consume power.
Yeah.
Like if the economy, regardless of the business cycle, especially the retail, people will need power in their homes. People will always consume.
It's an essential commodity.
Yeah, it's an essential commodity.
Do you think someone who bought it at 49 would listen to you, considering it trades at 4 shillings as we speak?
Well, probably not at this point.
On that angle, doesn't look so progressive.
No, it's
defensive.
Yeah, it's defensive in the sense that
someone has taken a proper beating. He's the one defending.
The company, right?
They've taken a proper beating, but they at least they'll probably get a dividend.
Like they've always been getting.
Look at most companies in 2020 reduced their dividend or did not pay dividend. Kengen increased their dividend. From 0.25 in 2019 to 0.3 shillings per share in 2020.
Yeah.
So for someone who's a long-term holder of Kengen, someone who's investing for the long haul, it's defensive in that sense. We've seen a pandemic, and yet you're still going to get a dividend yield of some sort. You're not going to go dry. So even when other stocks like people are pulling back and holding on to cash, Kengen was comfortable enough to say,
I get you.
So that's my argument on the defensive. Like in terms of getting cash flows, it is interesting. And then just a clarification on the return on equity, why it went low. It is the rights issue, because in 2015 the return on equity was 8%. Then rights issue came,
took a dip, went to 4%.
Went to 4%.
Literally halved.
So that's the outlook with Kengen.
Sorry, I wanted to ask you guys about Kengen bond. Because in 2019 they retired a 10-year bond that was issued in 2009, 25 billion Kenya shillings. Are you seeing Kengen coming back to the market anytime soon?
Do they need to?
They have considerable borrowing, but it looks like they are able to actually get funding at concessionary rates. So if you look at their borrowings, they have borrowings at
137 billion.
Yeah, but if I'm to just get it, their borrowings, especially with like the government of Japan, they have significant borrowing that they took. Like it's at 2.3%. So they're actually, although it's in foreign denominated currencies, which if you factor in if you factor in the interest rate, the foreign exchange at interest, the foreign exchange
component of all
risk and all that, it will come to probably maybe. You'll have to add maybe 6%. So still
that's
lower than what
5-6%,
but still lower than what you'd get from, let's say, the bonds market.
At this time. So
or banks.
So in this case, I don't think there would be coming to the market.
Any sector.
Yeah.
But you know, Kengen is really one of those companies that held confidence of investors because they successfully, you know, retired their bond in 2019. And you remember all that period, you know, corporate paper had, you know, faced a lot of turbulence, you know, when we had companies that had issued corporate bonds and things didn't go well. Investors lost a lot of money from that. You know, the likes of Nakumat and the likes. So when, you know, Kengen really
kept their word.
Yeah, kept their word and held the confidence of the corporate paper market. Up to now, when we are seeing, you know, other companies like Acorn, Family Bank, you know, Centum going back to issuing corporate paper.
Kali, I understood when you said I got what you were saying about this being Kengen being a defensive stock.
Yeah,
because that was proved in 2020. Because the revenues are not so much affected by COVID, you understand? This is something people would consume nonetheless.
Yeah.
It doesn't matter much about the prevailing environmental whatever.
Especially revenue from electricity because that went up.
And the other thing is with these PPA agreements usually, the PPA agreement usually stipulates that the purchasing entity, in this case Kenya Power, has to buy the energy or power supplied or produced
not what they need
by Kengen. So as long as the Kengen is producing for them, they are okay in terms of the revenue. So which points more? So in this case it becomes a Kenya Power problem in case Kenyans are not doing well enough to be able to pay for power, but Kenya Power are obligated to buy from Kengen.
So it is.
So essentially this is a business that profit is guaranteed.
Not really.
Yeah, if they maintain their costs.
Because it's mandated that someone has to buy.
So it's ideally your revenues are almost guaranteed.
Okay,
So the main issue for me is in terms of the growth. So someone could go and look at their revenues and say, but in 2020 also their revenues their profit actually jumped. Consider, but if you have to look at it,
more than double because there was a tax component there.
The reduction of corporate tax from 30% to 25% gave them a tax credit of 4 billion. But if you were to look at the profit before tax for 2020 and 2019, they were fairly
PBT. I think it went from 11 billion to 13 billion.
So if you guys were in Rebecca Miano's shoes in 2020. And of course, you know where you know the potential. People judge your history to be your potential, especially if your history is good. You've at one point traded at 49 bob, then they judge that as your potential. So that will haunt you as a CEO, right?
No.
So
I don't think it will ever go back to as high as 49, and I don't think even the market is.
This difference is too big not to expect it to at least make some positive.
That was just a one time. You know, the second day after you just listed, things are still very unstable.
No, it's still there for some time. The graph has been coming down
it hit
slowly.
49, then
not drastically. If it was drastically, could easily say that was a mistake. But anyway, so if you guys were in Rebecca Miano's shoes last year, would you have gone for the option to give your investors a dividend, or would you have done a share buyback to increase the share price of your company?
I'd give them dividend, just as Kengen did, because come on, I made profit.
Yeah, and also what's the share who's the share buyback benefit?
Your shareholder.
I had a PAT of 18 billion.
70%.
Yeah, 70% government, as in
So you're giving treasury.
Yeah, it's
the principal secretary in treasury.
Could that be the reason why people don't really care that much
about
what do you mean?
The share price? Because at the end of the day, it's not a Mwananchi stock.
I think that depends on. Also, it depends on the CEO.
Yeah. Also, when to your point that it's not a Mwananchi stock, if you to look at the breakdown of the shareholders, 9.7% local retail shareholders. Just 9.7. The rest.
And to add to that, Rebecca Miano owns more than 100,000 shares.
Yeah.
Of Kengen.
But that's
What
very,
does that-
it's very
what does that
insignificant.
say?
It's very
yeah,
small.
it is 0 point.
0.000.
But
now I'd like
still-
to know the thought process. Why?
As an investor, you should have confidence that the person at the helm of this
has an
company
interest.
Yeah.
has an interest here, so that even when dividends are being paid, she has something going to her pocket.
Should be worried also.
So going to the share price, I think part of the reason why the share price is not as exciting. The truth for me, to be honest, I don't find Kengen to be that exciting in terms of potential.
Why?
Yeah.
But as I've said, like I don't see the growth opportunities in revenue being that big. The diversification plans are good, but I think it's not as easy.
They want to, but they might not be able to.
It's
There's
not
not
as
too much
easy.
opportunity.
It's hard, but I think that would change the game.
Yeah, that would change. Yeah, it would. But then again, if you think about it, like if they're going to these other countries to try, they'll be facing competition also from probably their own state-owned farms or other
Private
So
sector.
it's not as easy. It's good on paper,
Why
but
do I
it's
feel
not
like
as
the
easy.
competition they would face is just from the 6 companies that are on top of them globally with regards to is it experience in the geothermal
Yeah.
exploration?
Yeah.
So in Africa they really don't
They're the
have
top.
competition.
Yeah, but you remember also, because for most of them, I think it's not. That is especially for in the I think they would have competitive advantage in the geothermal space, in drilling,
Yeah.
and also in Kenya, not in Kenya, in Africa, the places where you have potential for geothermal, location-wise, it's limited mostly to the Rift Valley,
Yeah.
if I'm not
The
mistaken.
Great Rift Valley.
Yeah, I'd have to look at my geography, but it seems to be limited to the Rift Valley. So that limits the countries or the potential expansion countries.
Yeah.
It's not an all Africa
That
process.
makes sense.
So like now, of course, Ethiopia is within the Rift Valley. Djibouti is part of it. So probably if you have to look maybe further south, maybe some place in Tanzania and that
Tanzania
kind of
is
These are
thing.
factors they cannot control.
It's the Rift
They
Valley
cannot
is still in Tanzania.
Yes, so-
Malawi.
Yeah, so questions are whether these countries, and these are SADC countries, remember, they do not seem to like to engage a lot with our fellow EAC countries. So I don't know whether they would choose Kengen as a part. So that's why I'm saying it's not exciting.
Yeah.
The whole reason would be it's defensive. So if you want it as part of your portfolio for consistent cash flows, because I do believe that they will have consistent cash flows going
Yeah.
forward, then you buy it. But in terms of looking for capital gains on the stock, probably not that much. And then the other thing, I think the perception that they're very linked with Kenya Power.
Yeah.
And Kenya Power is not doing well. So even if you have to look at their receivables, they have like 23 billion in receivables, which is a considerable portion of their current assets.
Yeah.
So that is why people feel like if Kenya Power now has an issue paying, then it directly affects.
But you see, it's not
Kengen.
like it puts the liquidity into any risks.
Yeah,
Because
so far
if you look at 23 billion out of the current assets,
current assets 34.
34, but they're still a very cash-rich business. So might not really affect their liquidity.
But when you say they are
The
cash
current
rich,
rate.
The cash is coming.
rich, most of that cash comes from Kenya
Kenya
Power.
Power. Yeah.
Yeah. We
But
need
at
to
the-
wrap it up.
Yeah. So at the end of the conclusion on Kengen,
What is is it a buy, sell, or hold for you?
for me, I'm looking at it as a long-term
Buy.
potential. I'm still thinking it through. as a long-term buy. So at current prices, if I enter at current prices of 4 shillings and they have a dividend of 0.3, that's a dividend yield of 6%.
Yeah.
Going forward, I don't know whether they're going to increase their dividend payout, because I feel like that would be the potential.
The selling point.
Yeah, that would be the potential growth, potential avenue for me to look at what the dividends that I'm going to get. So are they able to? But then for the analysis that I was saying earlier, I don't see much growth in profitability unless there's a considerable change in tariff. So I feel like also the dividends are going to remain consistent.
Okay.
So am I happy with a 6% consistent? At this, I'm undecided. But if you're looking to diversify your portfolio, I'd say buy.
Bye.
Yeah, if you're looking to.
We really need to wrap it up, Easter.
Okay, because of time, I won't go into the numbers.
Yeah.
But looking at the ratios, the fundamental ratios, like price to earnings ratio, they look good enough for one to buy. So, and also for cash, that is for if you're looking at returns, cash returns in form of dividends, it's a good stock to buy.
Okay.
Very conservative, not much risk attached to it. Buy. Plus, it's just 4 shillings. Come on.
Don't use that metric of it's just 4 shillings. Do your due diligence. Thank you so much for listening to us. We've come to the close of episode 9. Please follow us on our Twitter handle at marketmap_KE, on LinkedIn, Kenya's Market Map, and go to our website, check out the content there, and we have a contact section there. Tell us what you think, kenyasmarketmap.com. I have been your host today, Kengen Kiplimo.
I've been your co-host, Easter Fanning.
I have been Daniel Kalia. Don't forget to like, share, subscribe. Please like the videos. It helps more people to see it. Yeah.
Thank you so much. As we normally say at the close, it's nothing personal. It's just business. Cheers, guys.
Allah.
Bye.